Hey, it's another exciting day with another episode of the Crotchety Old Men podcast. I've said it once and I've said it twice, probably a million times now over the last 4 or 5 years. But for those of you who don't know, I'm Gary Smith. All right. And with me today, I'm one of the co hosts, but my main man, George Crumbly, is the host. And hello to George.
What up, Dozeman? How you doing?
What up, though? I'm doing all I can and the easy ones 2 times, George, twice.
As you can see, we're full of energy again this morning.
Oh man, absolutely, man. I'm locked in, ready to start, man. Let's get it. What
All
we got?
right. Smitty, I think one of the big things in the news recently is how our president made over $2 billion in his first year or last year, and which I'm sure for any investor out there was pretty shocking for several different reasons. One is that we were always under the impression that once you became president, you're supposed to put all your holdings in a trust and allow not to be involved in that because of all the decisions you make on a daily basis. So which affect the world, affect the economy, and things of that nature. But we can see in this case it hasn't. But we're not here today to judge that. I use that just as an example, but more so to talk to our listeners about, when you invest in these types of things, what are the outcomes, and what should the outcomes be? So the question is, and listen carefully, is your wealth their goal? There being the people that create this crypto, this coins, and things of that nature. I think that's very important because I think that's something that we assume that they're going to sell this stock for us to get rich, but really, is that their goal?
Oh baby, I told you I was strapped in. Well, let's say, for instance, well, first of all, we always put our disclaimer out here. We're not giving anybody legal advice, financial advice, or any of that kind of stuff. We're just dissecting things as we see them. All right, and making that type of money in crypto is it's a phenomenal feat when you look at it from, I guess, the outside in, right? But I guess when you think about it, if you create something, whether it be a meme coin, a token, or what have you, a crypto, and we all know there's probably thousands of them out there. I would believe a lot of different coins and stuff, and a lot of them don't make any money. But there's fundamentals about all investments. And when you look at an investment, especially something as new and as I'm going to say myopic as cryptocurrency, then you got to educate yourself about, all right, who's behind it, what makes it valuable, and how do I cash in and when. And so, in reading this article, and there's been a lot of them posted in Wall Street Journal, Washington Post, New York Times, you name it, whatever you get your media information from. Um, Most people have heard that the president and his family has made, as George said, about a couple of $1 billion. That's with a B, in a cryptocurrency that when it initially came out, I mean, the masses jumped all over it. The masses to the tune of over 800,000. Those are the ones that I guess have been calculated. It's probably been millions. But with a matter of days, um, that cryptocurrency, in my own vernacular, crashed, and those 800,000 or million investors lost. But the people who made or created the cryptocurrency won, and they won big. So when we talk about investments, is it a gamble, or is it a creation to create wealth? And so, what do you say, George? I mean, I know I open up a lot of stuff there in my little dialogue here, but to the retail investor, as we're called, which is the everyday American investor, all right, they call us retail investors, and I begin to see why they say retail. All
Hmm.
right, there's a reason for that. That's used in financial jargon. It's not something that the crotchety old men came up with. We're referred to as retail investors. So let that sink in for a moment as I pass this thought over to my colleague here.
Well, first of all, Smith, thanks for correcting me because I think I said millions. You're right. There was billions that he made. It wasn't millions. So thanks for correcting me on that. But I think it's very important, and not just crypto, but in any investment, you have to understand what the objective is, and you have to understand what your objective is. Is it for growth or if it's for preservation? Those are kind of things that you have to make. So one of the first questions people ask, when people ask me about investing, I ask them, "What's your goal? What's your objective?" And you have to look at that on the flip side when you talk about ownership. What's their goal? What's their motivation for that? Yeah, it's to make money, but is it to make money for you or is it to make money for them? Some founders and early investors receive tokens long before the public. So that tells you something right there. So if they already have the tokens even before you get them, here again, you called us, what did you say? We're real retail investors. We're really at the end of the chain, though, really, at the end of the food chain, because of the fact that a lot of this stuff has already been rolled out even before it comes to us. So, you have to look at that. You have to look at if the founders are locked in and basically can't sell the stock early, that's generally a positive sign. But if founders can cash out early, that's a warning sign. So these are kind of things that we have to look at.
And George, on top of that, many buyers, purchasers, particularly of the Trump crypto, they bought largely because of a political affiliation. All right, the media attention, the fear of missing out,
Hmm.
FOMO, rather than conducting traditional investment analysis, going back to the fundamentals. And we say it all the time: emotional investing often transfers wealth from late buyers to the early insiders. And you don't do anything with emotional. Emotion makes you weak when it comes to making decisions. And so when I see what happened in the paper to the hundreds of thousands of people who invested behind the founders of that cryptocurrency, well, you got to slap your own self on the hand. There's consequences behind every decision you make. And to George's point, when you're investing in something, the fundamentals are there for that reason. Those are the guardrails to investing. There are fundamentals in every facet of investing, whether it's real estate, diamonds, gold, crypto, or whatever that's out there. And if you ignore those fundamentals and you invest your money into something that you have not adhered to the fundamentals of, or to George's point, why am I investing in this? What do I expect to get out of it? When can I get out of it? And most importantly, how much am I going to get back out of it? It looks like all of those fundamentals or warning signs were ignored.
Smitty, I'm going to break it down so that our listeners understand because, a lot of times when you start talking about investing and things of this nature, they um, don't really grasp the severity of this. So I'm going to break it down like this. So when you go into Macy's or your favorite department store and you see all these different colors and you see these signs, buy me, that's what they're screaming out. So that's the marketing that they've spent hours and days and years in developing ahead of time for, whether it's summer sales or winter sales or long sleeve, short sleeve, colors and things of that nature. There's a lot of thought that goes into that, so it catches your eye and it gets you to buy it emotionally. You can be going into one of these stores because it was the closest place to use the restroom, but you're gonna see all this stuff and you're just like, why was I? Or you could go in there with your wife. She's going to buy something, and you end up buying something. That's all that this is why this marketing is designed, and it's the same thing with stocks, like you say. It's the fear of missing out. I want to get a Trump coin. Because it's going to be something that I can have and hold, and this most people say he was a successful businessman. I mean, we're not here to agree or disagree with that. You just got to read the text that says, several bankruptcies later, was he successful? But the hype says, comes along with the name, uh, causes people to buy this stuff. And next thing you know, they're not making the money because here again, what was the objective? Was the objective for him to make money, or was the objective for you to make money?
Yeah, Absolutely. I mean, before investing, you should always ask number one, who gets paid first? Okay, that's the number one question. I mean, that's what kept me out of a lot of MLM stuff way back in the day. I mean, there's everything from Looney Juice or Money Juice or whatever the heck is out there to Amway and you name it, all in between. And people blame the system, but it wasn't the system. You have to ask yourself this basic question: who gets paid first? All right. Number two, who controls the supply? Who bears the downside risk? Now that should be really a easy question to answer. Okay, but we escape or we ignore these basic fundamental questions to ask whoever it is bringing you this opportunity. How does the sponsor make money, even if the token price fails or falls? That should be your number one question, whether it's the Trump coin or the Doggy coin or Doji coin or whatever the heck else is out there. Ask that question. How do they make money? That right there should set the precedence before you take the time to invest your money. Invest your mind before you invest your dime, pretty much. All right. And this gets bigger, and it's more than just the headlines that you see, because those 800,000, or I'll just keep it simple, that million or more people who invested in those coins, all right, some of them, because of the belief and trust in the founder or the sponsor, have created a financial hardship for themselves. First of all, they lost the opportunity cost of putting that money somewhere else. Where that, heck, at worst case scenario, if you put it in a bond, at least you're going to make 4 or 5% return versus zero.
Yeah, yeah, yeah. One of the strongest indicators of a project credibility is whether the founder's financial investments match those of ordinary investors. I mean, you got to make sure that they're in line. If the founders can make millions or make millionaires of them before, me and you make $1, I mean, whose investment is it really? I mean, these are the kind of things that we have to look at. And these are the kind of questions that we have to ask ourselves. It can't be an emotional decision when you're investing your dollars. That's the bottom line.
Yeah. I mean, there's rules of investing in anything. Like I say, I talk about the fundamentals and things, but the rules are there for a reason, and they're there to help those of us who maybe not be as financial literate about things. And I believe the catalyst behind this tremendous up and then crash was celebrity. I mean, I'm gonna be blunt about it. Black folk, we're one of the biggest celebrity followers out there. If Kevin Hart puts his face on a bottle of tequila, oh, it's good. And you haven't even tasted the crap. Okay. You run out and buy a bottle. Why? Because Kevin Hart. And I'm just picking on Kevin Hart, but it could be anybody. It's a myriad of celebrities that will endorse a product or a service or what have you, and we'll run out and go buy it just because of that, without asking the questions that we're talking about. Most of us, and not just black folks in this next statement I'm going to make, but the masses, as I said earlier, it was the masses of people with the political affiliation and all that stuff that bought it blindly. And you go out and do things. So the decisions that you make carry consequences. Rule number one: never invest in, and of course, never invest in anything that you don't understand. But more importantly, don't invest more than you can afford to lose.
That's number one. That's number one. Red flags.
Yes. Yes.
Questions that investors should ask before buying crypto. They should be asking these questions. What are the red flags? Are these really projects that are going to allow us to succeed? Are we actually going to make some money out of this? You don't ask those questions after you've already invested. You run out and buy. And I look at these these IPO rollouts. Elon Musk just did one for SpaceX, and you look at all the hype for it. But look how it was designed. If you were working for the company, you got stock options before it even, because they knew they were going to go public. So they were able to get stock options way before. But then the question behind the scene is, when can I sell these options? Can I sell them, when the stock is rolled out? Do I have to hold them 6 months after? And that makes a big difference because if I can sell them as soon as the stock goes out, it's going to obviously be at the highest peak at that point, and I can make a lot of money. And then, of course, that's going to allow the stock to drop because of the fact that, when people see it selling, it's going to allow it to drop. So I'm here again. I'm gonna make money, and if I want, I can get back in at a lower cost. So these are kind of, you got to know the rules in order to play the game.
Rules of engagement. Speaking of that, as we know, we're headed toward a more dig- digitized society. Tokenization is becoming the norm for just about every investment out there. They're trying to tokenize real estate, et cetera, with these blockchains and et cetera, those type of technology, if you will, that's going around. Excuse me. And so, as they tokenize these investments, you have to look at the thing and ask about who's really benefiting. And I kind of hit on some of that, but let's go down that list because who really benefits from even creating a token? All right. Number one, the founders,
Hmm.
developers, the venture investors. What are venture investors? Those who, like our friends and family or whatever, that we tell about the venture first, so they get in first. The exchangers, the influencers that get out there on TikTok or whatever else is out there, whatever your favorite influence information is, and they'll tell you about doing this, that, and other. That's why influencers are created to influence you. And then there's the market makers. But here's the question: does their incentive, their purpose, does it align with yours?
Hmm.
All right. And I believe a more better understanding or a basic understanding of the business model behind the token is more important, not just the technology that supports it. And so, what I mean by that is that understand this tokenization that's coming our way, y'all. Understand clearly about this certainty or this no removal of transparency, as it's sometimes put out there, about how these blockchains move and how all this stuff is supposed to make the world connect faster and better. Now, all those things may be true, but for who does it make the world faster and better and more profitable too? So
Absolutely.
when yeah, so we have to understand what we don't understand. In other words, as I wrap that up, understand those things that you don't understand. There's no excuse for being ignorant anymore.
You have to understand who has the largest shares of the tokens.
Mhm.
That's so important. And founders and developer and team, yes, sometimes have 10 to 25% already off the top before anybody else gets any. So what's really out there for the average investor. Um, you have to ask: are their holdings subject to long term or short term?
Right.
These are kind of things that you have to investigate. That's why they sent out a perspective. A lot of us look at a perspective as just a document, but you got to read that. And there's a lot of information in there that tells you exactly what's going on. And at that point, you need to be able to make the decision, not on the name, not on the marketing, things of that nature.
Absolutely. Those prospectuses are there for a reason by laws. They're there to actually protect you as the investor. Remember, you're retail. So the opposite of retail is what? Wholesale. All
Wholesale.
right. So as a retail investor, you have to look in terms of, I mean, what regulations are going to come along or what regulations are there in place? Yeah, you got this prospectus, which is, all well and good, but who does the prospectus actually protect? It really does not protect you.
Mm-mm.
It informs you. And it informs you of information that we want you to know, we being that sponsor, that founder, or what have you. And so our attorneys and all those legalese, legal eagles and stuff, they understand the rules and regulations of a prospectus or what have you. So they can stay within the lines or the confines of that law. So there's not a whole heck of a lot of stable coin legislation available to the average retail investor. So, any exchange oversight or tax policy changes or consumer protection rules, most of us are not even privy of it, much less aware of it. All right. So we have to look at that because any of those changes, any of those regulatory nuances or what have you, has the potential to materially affect valuations, what that value is and how certain that value is. And more importantly, when you move, you should be investing with future performance, not past historical data, because the historical data, and they always tell you that the past results are no indication of future performance.
That's right. Yeah. So yeah. So before investing, I always ask who owns the top 10 to 20% of the wallets. What percentage is held by insiders? When do the insiders tokens unlock? Is the token distribution publicly available? Can a small group of holders significantly influence the market? And the takeaway is don't just ask what a cryptocurrency does, ask who owns it.
Say it again, George.
Ask who owns it.
That's
Because
right.
if a handful of insiders control most of the tokens, hey, they control the price and the future.
It's manipulative.
Yeah, yeah. So we have to be real careful. It's not just a sweet deal, you know.
Yeah, it's a sweet steal, though.
Sweet steal, yeah. That's exactly what it is. Yeah,
Think
a
about
sweet
making
steal.
$1 billion, man. That's a nice chunk of
That is
change.
nothing to celebrate, tell you, because if unless it's going in your pocket. Because the first question I want to ask is, what portion of that did you make,
Yeah, yeah. And do I get any of it? You know.
and do I get any of it? Exactly.
Yeah. So, I mean, we can chop this up and slice it so many different ways, but really, well, I shouldn't say so many different ways because really there's only one way, and just like what we have shared with you, adhere to the fundamentals, ask the right questions, do your research. All right, that's the main thing. Do your research, do your homework, understand what you're investing in. Um, I take a look at Bitcoin. Bitcoin came out years ago. I think within the last 6 months or what have you, or this year, it shot up past $160,000 per coin. Today, I think it stands below $60,000 per coin, and it's still going down. Now, I don't know how many of you bought Bitcoin and got out, but when you get into any investment, okay, it's easy to get into, but what you want to know is when I'm going to exit. And dollar cost averaging and discounted cash flow formulas will dictate to you that the longer you maintain an investment, typically the lower your returns are going to be over the same period of time. Short-term investments, short-term meaning 5 years. I'm not talking about a invest today and exit tomorrow. That's speculation. And I believe that what got a lot of people in trouble with this crypto that we're talking about is the speculation.
Mhm.
I hear a lot of old people, say, "Oh, I'm going to save this silver dollar because one day it's going to be worth $100 and all that stuff." All right, well, see how I don't know how that
See how that works out for you.
that silver dollar is going to be worth less because they don't understand the time of value of money. All right, so if I can invest that silver dollar today and make it $2 tomorrow, then I'm probably going to do that as opposed to holding on to that silver dollar 20 years from now and hoping it's going to be worth more to somebody, because hope is not a strategy.
Mm-mm. No, the best investment isn't the project with the loudest marketing. It's the one where the founder's only success is when you succeed. That's what you want.
That's right.
They want to see their investors succeed. That's what you want. That's the type of stock you want to get in, stock or crypto that you want to get in. So, and you have to. The only way you're going to figure that out is you got to do your research.
Yes.
This
And that
stuff
means,
scares me. It scares me. I stay away from it. It scares me. But I think it's important that we talk about this to our listeners, because of the fact that this is what's pasted all over the newspaper. And like I tell people, it doesn't matter what your affiliation. I don't care if you're Republican, Democrat, Independent, don't vote, do vote, whatever. That's your personal choice. But when you start talking about your money and currency and how things are invested, that affects everybody. That affects your decision on a day-to-day basis, if you're going to invest, if you're not, and it's going to affect your long term, because if you don't take advantage of the opportunities and you just stake your claim on working 9 to 5 for whoever you're working for, I'm gonna tell you, it's gonna be a long haul. You got to figure out what other vehicles. It's like Warren Buffett said, if your money is not working for you while you sleep, you're going to be working for the rest of your life. So you got to figure out something. But the only way you're going to do that is you got to do the research. You got to do the research. There's no shortcut to that because that's your. At the end of the day, that's your money. You know, but you got to get out. So here again, like I said, if we're not crotchety old men, we don't tell you about this stuff. You be wondering why we ain't scared. We're gonna talk about it. We're gonna talk about it because we're not saying it's a good investment or bad investment. We're gonna say check it out though.
Yeah, absolutely. Again, you hear me say it all the time: participate in your own rescue. A lot of you work very hard to get the money that you have, whether you got it by savings, whether it's got money in real estate, or what have you. And then don't allow some, now this is no shade on financial planners, anybody out there, these so called experts. All right. They're there to deliver the information. So they're not there to make decisions for you. All right. And that's something else. Push back, ask those questions. What are you investing in? How much are you putting into this deal?
How you make your money?
Right. How do you make your
How are you gonna get paid?
Right, exactly. All
That's
right.
the first question I ask. How do you get paid?
You know, that's exactly correct. Don't be
Mhm.
afraid to ask questions.
Mhm.
And the stronger, the better the questions, the better the answers you're going to get. And if you don't get an answer that resonates within here, then they're going to walk away from that situation and find another situation where you can sleep well at night. Okay, because it takes years to make money, but it takes seconds to lose it. Especially today with this technology and all the stuff that's going on. You must, as George has said, and I'll say it again, do the research. Do the research and find somebody. If you got not capable of doing it, get someone else that can help you do the research so you can answer the questions, get the answers to your questions, and then and only then do you identify a portion, okay, of money that you can afford to lose in the event that things don't go as planned or as projected. Here's something else. Salespeople, I've been one. You sell projections. Okay, if you put $100 here, it's projected that in 10 years you'll have $1 million. Well, all that is a hope. That's a projection. There's nothing in there to say that's going to happen.
Right. Yeah.
Have the
You know,
patience.
yeah. One of the things that somebody said to me yesterday, they started talking about AI investing. I'm like, what is AI investing? Well, if you put things in one of these chat servers, it'll tell you what to invest in. I said, well, you have to also understand that it's building a profile based on the information that you load into it. So if you're not clear on the questions that you're asking, they could be giving you investments for 21-year-old as opposed to an 80-year-old. So it's not as easy as what should I invest in, and AI is going to tell you. Or if they tell you that may not be the investment for you. So that's something just as scary. Yeah, you're here again relying on an electronic source to give you information here again. So now that's what I call faith investing, because of the fact that you're putting the faith out there that it's going to give you the right answer. But here again, I think you've said this before: garbage in, garbage out. It depends on what question you ask. It's going to definitely depend on the answer you give.
That's right. Ask good questions. Okay, deeper questions, and get away from the old soft surface questions or whatever. Ask the questions that matter most to you. Okay, and the answers that's going to affect the outcome. Um, as the old saying back in the day in terms of contractors, and I'll just use this adage, is that if you're one of the bidders for an RFP, you're in the contracting business, and you don't know that you already won, you don't have to guess then because it wasn't you. All
Mhm.
right. And I see so many of us, they say, well, there's a bid for the city or the bid for the state. We're going to go out here and submit our contract and bid. They just do that to send you through the motions.
Mhm.
They already know what contractor is going to get that bid, and it's not you. It never
Mhm.
is. Okay. It's not you. So, same thing with investing. Know who's behind it, know how they get paid, who gets paid first. Where are you in the supply chain? At what point do you get paid? What has to happen in order for you to get paid? Typically, it's a if come scenario. If the market change, if it doesn't rain, if this, if that, I call that if come.
Mhm.
I'm not into if come. I'm into income. Okay. And so I adhere to you. If anything comes with a whole bunch of ifs, it's not the right one. If it's not, you can't identify where the income is coming from and when you get it and how can you get out of it. Ladies and gentlemen, I suggest you pass.
Absolutely. All right, Smitty, I think we kind of got this point hammered home. Hopefully our listeners will understand and do their research and, take these some of the questions that we've raised as far as investing a little bit further, because that's so important, so important. So what words you got today to kind of take us home with?
All right, I'm going to take this one from Dr. George C. Frazier, a man that I know and I trust, and I enjoy his wisdom. And he says this: never argue with a person whose TV screen is wider than his bookshelf.
That's a good one. That's a good one.
Leave it
And
right.
as we always say on the crotchety old man, if you didn't know, nah, you know. Take care. Be blessed.